The real world value of constitutional money. Well, first off, we have to answer the question, what exactly is constitutional money? Well, if you look underneath the American Constitution in Article 1, Section 8, Clause 5, the United States Treasury and the Congress were supposed to be the only parties that had the power to coin money and regulate its value. So thus, most people turned to the Coinage Act of 1792, which defined what types of coins were supposed to be minted. And what you'll find out is that we weren't supposed to have a private Federal Reserve Bank printing fiat dollars backed by absolutely nothing. We weren't supposed to have a paper money system, but our money was supposed to have some intrinsic value. In fact, the majority of the American currency was supposed to be made out of silver. Some coins were supposed to be made out of gold, and others were supposed to be made out of copper. In fact, it defined one American dollar as 371 and 4/16 grains of pure silver. So thus, you could say that $1 is supposed to equal 371 and a quarter grains of silver. I was very curious, and I wanted to figure out what exactly would money from 1792, how would that be worth in today's purchasing power? Now, you could take this one of two ways. One, you could just look at it as a silver product, and the other way is actually to follow all the rules and regulations laid forth in the 1792 Act. First off, you could take the 371 and a quarter grains and divide it by 480, because we know that there are 480 grains in 1 troy ounce of silver, which is what is used to trade silver on the market. We're going to get a number which is less than 1. You can take this decimal or percentage and multiply it by the value of silver. Let's just say that 1 troy ounce of silver is $19.61. So thus you're going to get a new number which is a little bit over 15. You could round that off to $15.17. So $1, if it was just to be backed by the same amount of silver in 1792, would have over 15 times the purchasing power that it has now. It's pretty interesting, but stay tuned, there's more to it. Because you see, the 1792 Act defined the value of silver to be related to gold. It fixed the value of silver to the price of gold. In fact, 1 piece of silver was supposed to be equivalent to a 15th of the same amount of gold. So thus, we can say that if the price for 1 ounce of gold is $1,321.80, we could divide it by 15 and get the new price for 1 troy ounce of silver, which would be roughly $88.12. You could take that number and multiply it by the number which we found earlier to get a new value for 1 American dollar, or 371 and a quarter grains, which would be a number a little bit over 68, which would round off to $68.16. This means that 1 1792 constitutional dollar would give you over 68 times the purchasing power that a Federal Reserve note has now. It's pretty amazing. I want to go further and see how could this relate to things that we use every day, things that we come across like perhaps the minimum wage or an annual salary. So I made a few charts here. First off the bat, we have the federal minimum wage. That's $7.25 an hour. In 1968, the minimum wage was the most effective. It provided people with the most purchasing power. So thus many people use that as the building block to go on and see how we should adjust the minimum wage for the future. We could take the 1968 minimum wage and adjust it mildly for inflation, and it should be somewhere around the range of $10.52. We could take the 1968 minimum wage and adjust it with worker productivity, and it really should be around $22 an hour today. Now, here's the interesting thing. We could take the 1968 minimum wage and adjust it for the same amount of gains which the top 1% earners in the United States have experienced, and we're looking at a new minimum wage at $33 an hour. That's pretty amazing. But if we were to take that same $7.25 an hour, which is the current federal minimum wage, and make it out of silver-backed currency, you would have the same purchasing power as if you made $109.98 an hour. If we were to give you that minimum wage, but in constitutional money, you would have the same purchasing power as if you made $494.16 an hour. It's unbelievable. Check this out. Let's just say that in the year 2013, the poverty level is about $11,490 for an individual. If you make less than that, you're in poverty. The median income in the United States around the year 2011 was about $50,502. The average income was about $69,821. And the middle class, really what it should be making if it was to be on par with the best times in America's history, the middle class would make an average about $92,000 a year. But if you were to take that poverty level, that $11,490, and just issue it in silver-backed currency, you would have the same purchasing power as if you made $174,303.30 that year. Now this is really shocking. If you were to make $11,490, but in constitutional money, you would have the same purchasing power as if you made $783,158.40 that year. You would be practically a millionaire. Now there's more to it than that. A lot of people say we should eliminate the penny because it costs more to make than what it's worth, but the same can be said for the nickel. Anyway, I was curious and decided to look into the 1792 Coinage Act to see what exactly the 1 cent piece was for the United States of America, and it defined the 1 cent piece, or what we would call a penny today, as 11 pennyweights of copper. What's a pennyweight? A pennyweight, abbreviated DWT, is actually equivalent to 24 grains, and a simple multiplication problem, 11 times 24, is going to give you a 264 grain piece. Now you could take that 264 grains and use that to figure out what exactly a penny from 1792 would be worth today. Let's just say the price per pound of copper is $3.1240. You could take that number, that pound, and you could divide it by 16 to convert it to ounces, and then divide it by 437.5 to convert it to grains, because since copper is a base metal, it's traded in conventional pounds and ounces rather than troy ounces. Anyway, let's just see. 3.1240 divided by 16 divided by 437.5 is going to give you the price per grain of copper, which is an extremely small number. Nevertheless, you could take that number, multiply it by the 264 grain piece, and you're going to get a number that's a little bit more reasonable, though pretty small. Since that number is in dollars, we can multiply it by 100 to turn that dollar figure into cents. And you're going to get a number which is a bit over 11, which will actually round off to about 12 cents. So thus, 1 penny from 1792 would be equivalent to 12 cents today. Something pretty interesting. Anyway, just to sum up this video, it's just been a little bit review on how money from 1792 would affect our world today.